Yo, what's up, everyone? It's your boy Looney back with another real one. My account is sitting at 47K, and I finally got my year to date in the green. And I want to break down some key lessons and mindset shifts I've learned trading options and investing in 2025. We've had a very wild year so far: volatility, macro news, earnings swings, and now things are finally pulling back to the upside. So before we get into this, quick shout out to my Discord. It is free to join, and then I also have a premium if you want real-time trade alerts, coaching, and full courses. All links are in the description. Let's get into it. So in the past month, I am up 7,500 or 18%. But this didn't come with some serious mistakes and learning moments. Now, lesson one is to focus on survival first and not just growth. When I first started this year, I came out swinging. I was selling puts with high delta, sometimes above 40, thinking I'd collect the premium and ride the bounce. The problem was the bounce didn't come, and I got assigned on a few names like Riot and Mara at prices that I now feel are a bit too high. If we look at Mara, it is still below my cost basis. I bought it at 16.42, and Riot as well at 8.99. My average cost is 9.26. Of course, I'd rather get these for cheaper, and now I know, and that's why I'm selling more puts and having lower delta and just being more patient. That 20 to 30 delta is golden, especially in a choppy market like we saw early 2025. And even now, we could even say that it's somewhat choppy or volatile. We don't know what's going to be the next tweet from Trump. And safe income beats reckless premiums every single time. Now, lesson two is don't go all in. Cash is actually a position. One of my biggest mistakes I made early in the year was going too heavy too fast. If I just sat on more cash and waited for better setups, my cost basis on several plays would be a lot lower. Like, we're going back to that Riot. I put a lot of money into it. I have 800 shares and I'm still down on my total return, but now I'm being more strategic. I'm holding this cash for red days and selling puts when the VIX spikes. And when the VIX is high, that's a good time to sell puts. And also, if there's a red day, it's a good time to sell puts on those stocks. And then I sell calls on green days. That rhythm has helped smooth out my portfolio. And just overall, I'm not going all in. So I'll set up one trade, and then if this position drops further, I'll set up another trade, essentially dollar cost averaging with selling options. Now, lesson three is something that I would say I do pretty well because of how much my portfolio dropped this year, April 8th, when it was around that Liberation Day. I was down 18 or 20%, which seemed like things couldn't get any worse. And this is really just a real one. I've had trades that were technically fine, but mentally they affected me. So watching a stock dip below your strike price is very revealing of how quickly these stocks can go up and down. And it helped me learn to understand that there is a better time to invest. Now, there is a saying that the best day to invest is today, and the better day was yesterday, or how else it was said. I think it was the best day to invest was yesterday. The second best is today, which is true. But the issue is these investments could drop, and that's what you need to know. You need to be comfortable with your stocks, your position going down 15% all the way up to 50%. I was down almost 20%, or probably more than 20% at one point. And controlling emotions is not easy. Luckily, I'm able to weather the storm. And when I got assigned on SoFi, It sucked at first, but now I'm just selling covered calls and slowly stacking income while lowering my cost basis. And additionally, I'm still feeling the heat with SoFi because I bought this long leap call at a really poor time, if we're being honest. Luckily, I was staying patient, I controlled my emotions, and I didn't sell. So you can clearly see my break even is $17.60, and we still have a long way to go, but it has recovered a ton. And if we look at this in the past 3 months, it was down significantly. This was down 50%, and I still just held it and just let it sit there. And then I'm selling covered calls on that position, doing a poor man's covered call, so I'm at least hedging on the downside. So now I just manage the trade and not really look at the emotions with all of this. Another thing that I don't really discuss, and that is taking profits. So you clearly see I'm invested in these crypto mining companies, but I also own crypto. I'm up 47% on the month, and on the year when it jumped up in December, I was up 100%. And I did take profits, but clearly not enough, and that was my biggest problem. And now I'm taking profits. I'm taking a lot of profits. I've taken from Bitcoin, which is something that people will fight against, to take profit from Bitcoin. But I went, I guess, against the grain, and I am taking profits. I'm not hodling, as they say. Dogecoin, I've taken profits, and I ended up selling an entire position. I sold off Aave. I mean, now it's up 12%, which I missed out on, but overall, profit is profit. I was up 100% on that position. And because I own crypto mining companies, I also have that exposure. So I'm able to collect profit from actually owning crypto and then just waiting for my stocks to appreciate and selling covered calls. Because the issue is, if stocks fall, or if crypto falls or Bitcoin falls, then my crypto mining companies fall. Yes, my covered calls go up, but that is not enough to hedge. So instead, I am taking where I can take profits. I could clearly take profits on crypto right now, and then down the line, because sometimes these positions lag a little bit, like Riot, I should be able to take profits as well when it hits that $12 mark. So what's working now? That is something that is working now. So I've just been sticking to the system. Sell puts when stocks are down, sell calls when stocks are up, stack small wins, taking profits, and let the premiums compound. I'm not really trying to go for home runs. I'm collecting base hits every week, and that's why I'm up 18%. I am being a lot more cautious, and I'm still break even year to date. I am up 0.34%. We'll see how things go later this week, but I'm building back with way more confidence and smarter plays. So if you're new to this and you want to get into trading options in 2025, or you're still figuring it out, my advice is this: stay in the game, protect your capital, and focus on high conviction trades you actually understand. Compounding takes time, but it is real. Drop a comment. What's one thing you do differently if you started over this year? And don't forget, Discord links are in the description if you want to level up with real-time trades and live coaching. Like, subscribe, and I'll see you in the next one. Peace.